Hello, welcome to today's Startup Equity Matters. Today I have the wonderful Marisa Warren with me from Aliavia. We're going to be digging into the topic of funding for women startups. I don't think it's a surprise to everyone out there that there isn't enough funding for women startups, and there is momentum behind it, but we need to keep working hard to close that gap. And this podcast is about creating value from equity. So this is one way that we can help create value from equity by helping the discussion and look for solutions around how we can get more funding into women-led startups. It's something that I'm quite passionate about. I've been doing investing for 1 year, and Marisa, I don't know if I told you this, but we had 55% women-funded startups in our first little fund. So I'm really happy to, and that was my accident actually. Like I just must have a very balanced bias, or I'm not sure exactly how it happened, but I was really glad to see that. So Startup Equity Matters, thanks for joining in. I think we're up to number 7 now, and I'm really stoked to have Marisa on. I've known you for a little while now, and you've been a great advocate of ours at Cake, so we're really grateful for that as well. Welcome, Marisa.
Thank you. Excited to be here.
Yeah, we're excited as well. Let's go right back to the beginning, get to know you a little bit. Then of course we're going to get on to Aliavia, which is your wonderful current project. How did you sort of get started and end up on the trajectory that you're currently on?
So my path was not the typical path to VC. In fact, so I'm always an entrepreneur by heart. At the age of 10, I started this little group or club. I was the treasurer, I think, and we'd go and get, from the trash collection days, people's discarded junk, like sunglasses and things like that, and then clean them up and sell them. So then at the age of 13, I actually got my first part-time job, so still going through high school, and that was actually serving drinks at my grandmother's art gallery in Canberra. Now, legally, I don't think that we were of age to be doing that, but I think that just gave me the real bug for earning my own money. And it's interesting. One weekend I'd earned some money. I spent all my money from the previous week. I went shopping and bought a whole lot of clothes. And came Monday, I needed to buy my bus ticket, and I'd run out of money. And I went to my mum, I need money for the bus. And she's like, well, Marisa, you're earning money now. It's your responsibility to pay for things. You don't have money, you have to walk to school. So at a young it's the tough love approach.
Go, Mom.
And I tell you what, we're using that with our girls as well. It helps really understand the value of money. And from that point as well, it's you have to work for it. Right?
I love that.
It's just not going to be handed to you on a silver platter.
I do that with my kids as well. They say, oh, can I have this or that? And you say, yeah, well, you've got money in your account. And they're like, oh, no, well, I wouldn't spend it on that. And I'm like, well, there you go.
Yeah,
that's
exactly
what I want you to think. So I guess entrepreneurial background and a family that taught you, I guess, the value of money. I think a lot of entrepreneurs would have that, and that's a tremendous insight. And then, fast forwarding a little bit into the career phase. Sort of how did you get started? Tell us a little bit about, I guess, the early sort of corporate journey.
Sure. So for me as well, when I graduated year 12, and that was in Canberra, in Australia, Canberra Girls Grammar School. For me, the thought of going to university was like, going to another institution for 4 years. I just couldn't do that. So I went, despite my parents' real objections, highly educated people, and same with my sister, I went straight into business. And I worked at a professional training and development company. And in that first year, so I was the very politically incorrect term, but sort of at that stage, this was in 97. It was like the Girl Friday. I was doing everything in the office, but point as well, I got exposure to the IT manager. And he was showing me these cool things like email and, websites. I'm like, wow, and so then from there, my next job was for Intentra Australia, which was, they developed the enterprise resource planning product called MoveX, and they also an IBM hardware reseller. So that was my foray into tech. And from there, I just fell in love with tech and have been involved since then, through the highs and the lows. I started selling enterprise software in 2001, so probably the hardest market to be selling software, and in Australia, because we had 4 compelling events for companies not to buy software. So all companies were, in the lead up to 2000, to be GST compliant for Australia, to be Y2K compliant. Then we had the .com crash, and then we had 9/11. But still in that first year of selling software, I made my quota and sold $800,000 of software. So I got the bug. I went on to working at SAP. And that's where I moved from this role of enterprise sales, selling multi global solutions, to then building a channel business. So for SAP, they had just acquired Business One, this small Israeli company, and the product was focused for the SMB market. And so SAP, top end of town, they couldn't have their reps that would sell these multi-million-dollar solutions try and sell this little SMB product. So they went, okay, well, we need to build a channel. And in Australia, and then they go, okay, well, we haven't built that before, so we need to hire people to do that. So it was myself and my counterpart, Vince, that were responsible for building out Australia. So for me, I had Southern region, which was everything except for New South Wales and Queensland. So the rest of Australia, I was responsible.
Wow. That's tough.
For building it. Yeah. So we, sometimes I'd be in, Tasmania, and then up in Darwin and Western Australia, like all over the place.
Wow.
But it gave great insights into how to build a channel right from the beginning, doing the territory analysis, onboarding partners, managing them, and in the end, sort of, terminating where they didn't work. From there, I went on to Microsoft, and it was different. They already had a channel, but there were two things that two problems that they were trying to address. At that time, we had this thing called the cloud that was coming out. So we had to have partners transition their business models to selling on-premise software to selling cloud solutions, and you needed completely different businesses. You sell it different, you market it different, you support it differently.
Quickly, do you help? I think you do. So you do a little bit of, I suppose, support for your portfolio companies in this area. I mean, it's obviously a huge strength of yours: marketing, sales, channel go to market. And we'll get into this in a minute, but with Aliavia, you're focusing on Australian companies expanding to the US, and so I presume that many of them are looking for this type of help. Are you jumping in and coaching them and helping them with this stuff? Yeah, cool.
Yeah, absolutely. It's interesting because
I'm going to get you to help me. I'm going to get you to call separately. We might even record it and share it. No, that sounds like a great skill to have for your portfolio companies that are expanding.
And that's why we have, where we see when we're leading rounds and we want the board position, we don't have any pushback, because they can see that, we can add significant value to their business. And in fact, where we haven't led rounds, we've had the fellow investors and the founders want us to take a board seat, because
100%.
Yes, and that focus on how do we grow your revenue. But we found it with SAP partners, Microsoft partners, even Workday when I did that. And then the biggest challenge is around that sales and marketing piece.
Of course. That's, so many founders come from a technical background. So there's just so much to learn. And even if you have a marketing background in one country, to be able to, then cross an ocean and be able to do that in a new market, is a tremendous challenge. Let's talk a little bit about your transition. We all have transitions in our careers, and so now you're founding and growing a new venture. How did you find, coming from working for quite, a lot of the biggest tech companies in the world to now being, I guess, a business owner and a founder and getting Aliavia going?
So it was interesting. So it was when I was living in New York. So this is the third time I'm living in the US. So I'm dialing in now from Laguna Beach, California.
Lucky, very nice. I've been to Orange County a few times now. It's a fantastic part of the world.
It is. It's great. And so I've been in tech at that stage for almost 20 years. And for me, there was just this, I never had female mentorship support. Like I had awesome males, helping me up the ladder. But I never had that female mentorship, and I really craved that. And when I'd reach out to females in leadership positions, either they would see me as a competitive threat and wouldn't want to help, sometimes pretend to help, which is worse, or the old school, no, I fought my way to get up to the top, limited number of seats at the table for women, you have to do the hard yards yourself. And as I sort of said earlier in this, I am not afraid of hard work. I know that it takes hard work, but at the same time, I see guys are really good at helping each other up the ladder. And for me, so I reached this frustration point in my career where I just went, we should have more women helping each other. I ended up launching Aliavia in New York, which was a not-for-profit helping women tech founders get investment ready and funded. I launched that in 2015. And that was really the precursor to the fund. So then, since then, we've had 175 women through the program that have raised more than 120 million. Thank you.
Wow. Amazing.
And had 3 exits. Yeah.
Yeah.
So then parlaying into the fund. So that was ticking over nicely, always sort of going with that business model, because it was a not-for-profit. How do we realize the value? But how do we, it was great at the programming, helping build the confidence in the women and the education piece around what that investment process looks like, connecting them to potential investors, but we could never actually then invest in those businesses. So with the pandemic in full swing in 2020, and having seen the funding go backwards since 2019, it just presented a great opportunity for us to go, okay, now we can to launch a venture fund. We had so many brilliant businesses coming through Aliavia that all of a sudden couldn't get funding because funding had just dried up overnight for female founders.
So cool. No, deal flow is so difficult for a venture fund, so I guess that was a natural progression. But I guess still a real challenge to go and put a fund together, and it's a huge step. Just quickly before we get on to Aliavia, we talked about a little bit about the dynamics of women in leadership and sort of the tension and difficulties that brings, but there's probably been some women leaders that have inspired you along the way, you've looked up to, or who have helped you. Have you got a couple of people that you'd like to share?
So I will call it. So the great thing is that since I've come into this world now, the venture world, our anchor LP, Carol Schwartz, she co-founded Scale Investors, a big advocate for backing female fund managers and female founders. She's on the board of the Reserve Bank of Australia. Just a sensational woman. I say, weekly almost, I'm so grateful that we have her and her team backing us in our fund. Just tremendous support, providing not just that advice and guidance, but there when we need the help, holding us accountable as well, because it's quite often women founders just get oh yeah, that's a nice idea, and just get the the nice little like pat on the head type thing of, oh yeah, that's lovely, and not actually the constructive feedback on how to improve.
Yeah.
And that's what I really like about Carol. So
Startups are such a tough space, and people probably nervous to be giving to being franked, and then also you have the additional like toughness of women in startups. And so I suppose having really frank people around you that are happy to have the hard discussions and really do the learnings and iterate and improve, so valuable. But I could see how it would be challenging to get those discussions going properly. So yeah, it must be wonderful to have those type of people around you. Speaking of people around you, let's get into Aliavia. I've recently also met your co-founder, Kate Vale, legend as well. You're both like so impressive, and even on every time I meet with you, I'm always impressed at what you've achieved and you know how you're going about what you're doing. So please do share, Aliavia, a little bit of the background, what's going on. I'd love to dig into the portfolio a little bit as well. As an Aussie founder expanding internationally, I feel like I have a great connection to what you're doing there as well.
absolutely. So just when and just touching on when we did actually cut. So Kate and I. So you mentioned Kate. She is my co-founder. She's the ex-managing director and first employee for both Google and Spotify Australia.
Whoa.
So when they hired her for Google, like literally for the first few weeks, she was answering her home phone as like Google Australia.
How do you do that? Like, how does that happen?
Yeah.
I must ask her. We're catching up next week. I'm definitely going to try and find out more about this.
I'll do. And she has a funny story around when Google acquired the Maps business.
Google
Yeah.
Australia.
Yeah. When they acquired the Maps business, she gets this knock on the door one day, and these guys, and they've gone, hi, we're such and such, and she's like, who are you? And she's like, you've acquired us. She's like, right, okay. So the decision that's sort of made at HQ, and but she grew that Google business from like zero, her as the first employee, to $500 million through IPO. Spotify helped grow that from, again, zero to the #1 streaming service in the region as well. So we get to your point around the value that we provide our portfolio companies. That's, I think, really being able to scale those hyper growth tech companies and drill into her superpowers around the HR challenges that go along with that journey as well.
You'd be hard pressed to find better CVs as partners in funds anywhere. It's really wonderful.
You say that, but the interesting thing, so for us, I mean, we've touched on the challenges that female founders face. So female fund managers, it's probably about 100 times harder to raise a fund, right? And especially Kate and I, we do not have the typical VC background at all. And when I came to her with the idea, I said, I've got this idea. She goes, it's brilliant. I'm in. And then her next question was, I haven't started, I don't know what to do. And I said, I don't know what to do either, but I think from the research that I've done, we need to talk to some lawyers and get the structure right. So we surrounded ourselves with brilliant advisors to talk to them about, and experienced people who'd raised multiple funds, to talk about what the approach that they took. And then we just, decided on our own investment thesis and what journey we would take. But it has, I mean, we would have, call after call after call. For the first 3 months for us fundraising, like 3 months solid, we had no's. And we just went, we went back to our advisors and we said, okay, we think we've got pretty good track records from a tech operator perspective. And, we had to adjust our strategy. And since we went back and adjusted our strategy very quickly, we raised just under just under 2 million in a couple of months.
Congrats.
So thank you. But it's still, it still is much more of a process for female fund managers.
It sounds so much more difficult. Like that's an incredible insight.
And that's why we're grateful that now we have 27 investors. We've raised just under 10 million. But the likes of Carol, of Robin Denham and her family office, headed by Victoria Denham and Matt. And then we have EJ from Morgan Stanley. We have the Tattarang family office, which is the family office for Nicola and Andrew Forrest. We have Don Pym's family office, and then we have a bunch in the US as well. So I think we've been able to attract some really great investors that are very passionate about changing this funding gap for female founders and female fund managers for that matter.
Well, I'm very hopeful that from this podcast we can help in some way. If anybody wants to get in touch with Marisa, I think LinkedIn, yeah, or hit me up. I can connect you. We're huge advocates for this, and hopefully we can help you learn a little bit about Marisa and Aliavia and the space today, and help bring more investment in. And so, what sort of portfolio companies are you investing in? What's the thesis? Why is it a great thesis? How's it all going?
So at the top, it's an investment mandate to invest in female founders. So there must be at least one female founder on the cap table with a significant equity position and a C-level role. So that for us is a non-negotiable. Then we're investing across both the US and Australia. And as you highlighted before, we're particularly interested in those Aussie businesses that want to expand to the US 12 to 18 months post our investment, because we can help them. We're sort of that bridge to the US. We can help them get ready to launch into the US with our networks, our investors, but we understand what it's like selling in the different markets. And selling in New York is very different to selling in LA or Laguna Beach, etc. And also for those businesses, there's a natural nice valuation uplift. The Aussie market is still probably 30 to 40% cheaper, like from a valuation perspective, than US. So that's why we as well like that, because that then obviously represents a good return for our investors with that expansion. We invest pre-Series A, so we'll do pre-seed, pre-product and pre-revenue. So 2 of our 9 companies that we invested in at the pre-seed stage. We do seed, probably the bulk is at the seed at the moment, and then seed plus. So seed plus is fairly new over the last couple of years, and that's really where they don't have the metrics for a Series A, but they're past the seed.
Especially challenging for Australian companies, because you got to get to the US ARR metrics to get the A round done as well. So that's we sort of saw that C plus coming in that space, sometimes just to cross that currency gap too.
Exactly. And then we do, so we're enterprise and consumer software businesses. So given Kate's and our background around the value that we can provide companies.
Awesome. No, I absolutely love that. I think in Australia valuations are a little lower, and there's less investors as well, which I think is an advantage. So I think the ability to be able to access really great companies, I believe there's an advantage on the investor side there. Maybe this year in the US it's normalized a little bit, but certainly going back a few years, it was really hard to have the time to do the DD in the US, to be able to get the type of companies that you really wanted. But in Australia, I think investors do get that time. So that's another advantage that I would sort of see. We were talking earlier, and I know you probably don't want to call out one company over another, because I'm sure you love them all equally. But we were talking about how to. So maybe we can just chat a little bit about them as an example, a company, and it'd be great to learn a little bit more about them specifically, but also their US expansion. Just super interesting to hear a portfolio example.
Yeah, how to is a good one, because it did actually come through our pre-accelerator, Aliavia. So we've been I've worked with them since 2019. So been able to get some good exposure to the business. But and the part that, you know, going in and investing, and why we invested initially with them, was they had this 20-year-old consulting business where they were selling like they were building digital learning for their clients, and it would take, or e-learning for their clients, and it would take months to build this and then deploy it. And they saw that the future was going to be SaaS driven, where companies could create their own digital learning content and roll it out to their users. So they disrupted their own business model with this product, and actually their MVP was actually paid for by a customer, which was, but that they could then use as they like. So really like the commercial nous.
Every founder wants that.
Yes, exactly. And really deep domain expertise in that area. Since then, they have a couple of hundred customers in Australia, and have expanded to the US. But they actually launched the SaaS product in February of 2020. So then we went into lockdown. But they're really impressive growth over that period. And in fact, in the US, they have over 20 customers now, and they have displaced Articulate a couple of times, which is their largest competitor. Articulate had get this, it's a Series A $1 billion funding round.
Wow.
In 21.
Wasn't 21 crazy?
And they're coming out with new products as well. They'll be coming out sort of later this year, but they've been a great success story in terms of what you can do from Australia initially, you know, and they have over 20 customers now in the US, what you can do from Australia to initially like test out the market, to understand if there's real appetite in the US, and refine that before then making that big boots on the ground here in the US. So they've done that very well.
Amazing. Quickly, and I don't know exactly how much you want to share, but the US is such a massive market, and you know, we're going through this ourselves. And so one question I thought might be helpful for people is kind of how they managed to sort of segment the market. Was it by region, by customer, by industry? And you know, what was the thought process? If you could share something around that, I think it might be interesting for people to just hear some experience on, you know, how they went about thinking about the US and segmenting it.
So the first thing, so looking at your ideal customer profile, because your ideal customer profile in Australia may be different to that in the US. So it's understanding first in Australia what works, and then looking at that in the US. But the next thing is the geographical focus. You want to focus like ideally on like one market. I mean, even if you just focus on California, for example, I mean, that's how many times bigger than Australia.
Yeah.
And it's narrowing in from a geographic, like focusing on one or two tops geographies, and then starting to see with your ideal customer profile and vertical. I'm a big supporter of the sort of like the vertical approach as well, and understanding, okay, so within that market, are we focusing on health tech companies, or, you know, etc. But, you know, what do they look like? Are they small, mid-sized, large? And just so refining down, and then start, you know, testing with the market messaging and seeing what works and converts. And it is a, you know, a test and iterate sort of type process, but you need to be super focused. And it's also Americanizing the website, Americanizing it with you know, changing the S's to the Z's, and very much having that product-led growth type so strategy with, you know, the price list, and ultimately where you can, you know, some of our startups moving towards having both that self-service, you know, put a credit card in, buy the product yourself type model, but then, you know, and still have then the enterprise sales. Yes, okay, so you actually have to have somebody take you through the process and sell. Like, that's where we're trying to get all of our SaaS businesses to, because initially it's a founder-led sales. They're doing that themselves, they're selling, then as they start getting on the team, it's still an enterprise sale, and that's still obviously a valuable part of the business because the deals can be significantly bigger. But then how do you capture in that sort of lower part of the market that's just the self-service, it just ticks over and just requires more marketing efforts to help generate the sales versus sales effort?
Extremely important stuff. I was fortunate enough to go through the Austrade landing pad up there out of San Francisco, and you're constantly evolving and learning as a founder, and they ran a really nice program for us. We talked through a lot of that, and we've been through a lot of that ourselves, so it's wonderful to hear you having that knowledge as an investor. And I advocate all women-led founders hit Marisa and Kate up and sort of tell them what you're doing, and I think it'll be really worthwhile, especially if you're looking to expand to the US. So, all right, let's shift up into the core topic today. We're really here to, highlight the challenges. Let's not gloss over them, like there really are challenges. We also want to try and talk about the progress. We want to try and talk about like the really positive attributes of women-led startups as well. So, I suppose on the little bit of the positive side first. The sector is growing. There's certainly more and more, women-led VCs and women-led, companies. Unfortunately, the funding into women-led startups has actually gone down a little bit in the last few years, which is really tough. But I do feel like there's momentum, certainly anecdotally around the industry. I feel like there's more and more things happening. Obviously, yourselves, you're making great progress. There's Australian industry I'm more familiar with. This is powerhouse women everywhere, so certainly doesn't feel like there's a lack of talent by any stretch. Some organizations we found doing research, there's Women's Startup Lab, Female Founders Alliance, there's Women's Venture Capital Fund, and I'm sure there's many more. But at the end of the day, look, the data is still tough. I think 2021 PitchBook said 2.3% of venture capital globally went to women-led, and I know you've got on your website there, it's only 1.9 in Australia in 2023, 1.9%. So nowhere near where we need it to be. How are we gonna continue to grow? How are we going to continue to improve? Empower women VCs as well as women-led startups. Marisa, I know you got some great insights into this and some great ideas. So let's get into that.
Yeah, and something that I'm very passionate about and fired up as well, of course. So to the point, in 2019, I mean, we reached an all-time high of 2.9% of venture funding in the US going to female founders. To put that in perspective, we raised $5 billion that year, and that was more than all of the female founders in the US raised. So, and I often say, well, look what happened to WeWork. Yeah, so
he's been refunded too for his new venture, like tremendous off a napkin, it looks like. So yeah,
and again, there's been so much outcry from the industry, like how could Andreessen Horowitz do that? Like, and it's and not be actively backing some of the female founders. So that's another story. But I think so on the positive. So how do we move this forward and actually get more female founders funded? And I look at this as, as investors, we have the power to change the world through what we invest in. So first of all, let's make our dollars count, by investing in gender diverse teams that are going to have a positive impact on the world. So that's something that I think that investors really need to remind themselves of, that they are influencing, where our world is going.
100%. Yeah.
So 3 key strategies I have that. So the first thing is having that investment mandate to invest in female founders. So for us, I've already talked about that, but particularly we have the one female founder with a significant equity position. So we've had ones where we've had 3 founders, 2 of them male and 1 female, and the female 2% equity.
No.
And for us, we just went, guys, no. I mean, it looks like she's the token female, and that is not.
I'm
It's
sorry
a
to
deal
jump in on
breaker
this.
for us.
I have a really good example, and like I won't name names. I've been really actively working to have more female friends in the industry because I think it's natural that we don't, but it sucks and it puts people at a disadvantage. So I've been speaking to them, and then so you'll have 2 founders, and then like a female will come in and more or less do everything while the guys sit back and do nothing. And then they have no equity, or they've got like the ESOP with like 1%. And I'm like, you need to be a founder. You need to be saying, hey, I want like bulk equity. I don't know exactly how much to say, like going for thirds, probably a stretch, but could it be 10 or 20%? Like it really should be on a day 1 startup that's like in the first couple of years and hasn't done any major contract. And you've got women in there like doing the heavy lifting. We have to find a way to get those people bigger stakes of equity. That's critical.
I agree, and I'm a big supporter of having equal splits as well.
Yeah, me too.
Somebody can come up with the idea, but so what? If you can't execute the idea, it's worthless.
Ideas are worth nothing. I totally agree. Unless you've got IP, build something, but that's not the case in these situations normally. It's like I've got an idea, and then here you come in, you do all the work, 1%. Like
and so for us, and we give that honest feedback to startups and funders around why we're not investing. And for us, that equity piece is really important. And so appreciate that not everyone can have an investment mandate to invest in female founders. And then I wouldn't, expect that. However, so the next strategy then is if they're not going to have that investment mandate, then there need to be quotas at the investment level. So you talked about that you've invested in 55% of your portfolio companies are female. Well, they should have a quota that at least 50% of what they fund is female founded. And to take that one step further, their LPs should be holding them accountable to those numbers. So again, the LPs have the power to influence what a venture fund invests in terms of, if they go, we're not going to hold you, if you're not going to do this, and we won't, continue to invest in future funds.
What I don't understand is we all have partners, wives, sisters, daughters, whatever, yet we won't advocate for them. This is the thing that always surprises me the most. So many great men, and they're really great in so many aspects of their life, but they won't push this a little harder, or the partners of the LPs, or however they position. I think there really is an opportunity there. Can I open up a quick question? And I've seen some data around this online, and I've seen some of the Australian VCs trying to do, doing some research on this. I apologize, I didn't bring the data, but one of the big questions is deal flow versus, deal numbers. So just say, let's use rough numbers. We've got 2% women funded, percentage. Do we have numbers on women funded deal flow percentage? So like, because there is I believe there's probably a participation difference as well. Like, I'm not trying to cause a fight here. I'm just trying to dig into that a little bit, because I suppose, and I know it's not 2%. I know there's a lot of women funded startups, but do we have some data on that? If not, I'm going to dig into it and I can provide it afterwards, just so we can help people understand that complexity.
Yeah, that is a really good point, and I'll answer that first, and then I'll come back with my third point on.
Yes, of course,
to improve. So just on that, so we, I get this comment a lot, and I had this from the Aliavia days as well. Are there enough, female founders to help and to fund? And I mean, we get on average 10 deals a day coming into our inbox, and we have done a very poor job of marketing our fund. So when we have our first employee starting next week, which I'm very excited about, Chantal, thank you, head of platform, and so she'll be helping us, ramp up our marketing efforts as well. But I mean, that's just we are seeing so many quality deals come in, and we just our fund isn't big enough to. That's why we need to raise another one.
Need to do more marketing. Oh, well, that's kind of what we're here for. So that's great. We're helping with that. And what was point 3? So quotas. So we had we need just mandates to invest in women-led startups. We need quotas, and then what's the third solution?
And the third thing is then the diversity clauses in term sheets.
Okay.
So we do this. We've also we've co-invested with the Adam Milgram through his family office, who is one of the partners at Giant Leap, and I know that Giant Leap has a diversity clause as well in their term sheets. It's really important. So for us, the diversity clause is that for every position, so from the board through to every employee that they take through the recruitment process, the final shortlist of candidates must have at least one female candidate and or a minority candidate.
Mm-hmm.
So it's not just saying, so then they need to do work to make sure that what's coming in, at the beginning of the pipeline results in, positive at the end of the selection process.
Yep. I love that. You've made me nervous because, it's like full disclosure at Cake, we're not as diverse as we would like to be. But we're doing our best, and we are really trying, and it's a journey we're all going on to learn, and we're constantly implementing more and more, strategies and policies and processes as we grow to have greater diversity. Thankfully now we have a we have a female C-level, thank goodness, and she's been wonderful in helping us learn. And recently when we're hiring a CFO, we not to defend ourselves necessarily, but I guess just to be transparent, I don't want to be saying we're the bee's knees at everything either. So, but we worked hard to ensure we had women in the final discussion, and that we gave them every opportunity for the role. It was really important to us that we continue to add all types of diversity into the company, and we see it adding tremendous value to us, to our customers, to our community. It's not just because we have to, it's because we know we have biases, and we don't want our biases to be part of our company and our community, and we know that we have to build processes around that to give us the rich life that we want, and the rich community that we want to have at Cake. So that's sort of just a little bit from our side. I don't know if that's oversharing, but I feel like you can't
it's good.
discussion without being honest and trying to sort of share where you are on the journey. So coming back to quotas, just to bring us back, where do you think the quotas should fit? Should it be 50-50? Is there a range? Should people be making progress with their quotas? How do you sort of see that? And what do you see happening in practice? Where do you see some of the best outcomes occurring at the moment?
It should be 50-50.
Yeah.
Why shouldn't it? It's you just have to do better at the way that you're marketing your fund, working with your companies, assessing the companies through your investment process. But the other piece that we haven't touched on is making sure, because I think it's roughly on average 96% of the investors out there are white male, right? So and you tend to invest in what you know. We have seen some females promoted to partner, particularly in Australia, over the years, which is great. But then again, it's they're not in that position of power where they can take the investment if there's something that they really want to invest into, then go and invest. So they don't have that power until you get to sort of the GP level. So we need to see, particularly in Australia, more female GPs that have the power to make those investment decisions, and into female founded companies.
Love it. And then, obviously you're passionate about the benefits that's going to bring to companies. So let's talk about, the benefits of having diversity in a company and having women leadership and women-led startups. Yeah, where would you start? I'm sure there's a long list, so let's just start.
Very simply, it makes you more money.
Yeah.
No doubt. Like, that's better for everyone. It's better for, the employees, the founders. It's better for your investors. They simply, like, you need that, and it goes both ways. Like, you need the male and female energies around the table, from the top all the way through the organization, and you ultimately deliver better returns. So there's a Harvard study that's on average 35% better return on investment. So it's, for us, it's a no-brainer. Yes, we lead with that mission, but then ultimately, you're doing good for society, but ultimately it makes everyone more money.
What else do we need, eh?
Yeah.
Oh, look, I'm not doing a good job with my timekeeping, because I think we're flying through the time. It's just such an interesting topic, and it's something that we both really care about. And I've really, really enjoyed the discussion, as always. Let's do a couple other things. Let's talk about technology, right? There's so much going on. The pace of change is just growing and growing and growing. Obviously we've got the massive AI boom this year. I'd love to hear from our Aliavia perspective, whether there's particular trends that you're liking. I guess particularly, how are you seeing the AI space? Yeah.
So yeah, like I said before as well, I've been in tech since '97, so seen a lot of.
You've seen a lot of AI. You've seen a lot of AI.
Well, we over the last couple of years, a number of our companies, do have AI at the core.
Yeah.
And
but
have
the word's come and gone over the years, hasn't it? Like, it's kind of been a buzzword and it's come and gone. I mean, I think particularly the current boom is a little bit more pronounced than some of the ones we've had before, but
I think it is a major shift. So, like with the mobile devices coming in, the move to the cloud, I think this is going to be a significant shift for the tech industry. You will get left behind if you don't start thinking about how you can use AI, not only in the product, but then also how you can drive more efficiencies in your business using it.
And do you think, what's the time frame for startups? What are you seeing with the portfolio? What's your view on a time frame? Efficiencies, I think, is like now. I mean, you would probably agree. I mean, you can just use this stuff like immediately. I mean, that's why we're all so excited, because you're sort of asking questions, getting tremendous responses, and we're seeing it at Cake. I mean, efficiency advantages are like now. I'm sure you would agree. What about product changes? I mean, do you think that that's a now thing? I'm seeing a lot of announcements coming out about it, but I'm like, they're really using it? How much are they using it? How do you see that side of things?
So there's a couple of things. So first of all, on the companies, it's important to say, okay, so if you're using generative AI, whether it's Chat GPT or GPT, 4, etc., that you have that, but then you're building your own IP around that, so it's not easily replicable, by other companies. So there is some value to what you're creating. So investors are particularly interested in that. So yes, how you're using that technology, but then what value add are you adding around that, and are customers willing to pay for that? Then the second piece is, it is a bit like the Wild West at the moment. We have all of this talk about regulation as well. So it sounds like Europe's probably going to move first before any other sort of like countries, before the US or Australia. So we're watching to see what Europe does. And then, because that then could have an impact on product development, but it's still, you shouldn't be waiting until these regulation changes come, because as we know, it's it can take a while for government to agree and then implement the rules. So it's start experimenting with it and really into your product and seeing how you can do that. Is our advice to our companies. But we have a number of companies, like one in particular, Aliavia, that's been using generative AI and particularly ChatGPT. Now they're upgrading to 4 for like the last 9 months, building that into their products. So
9 months already. Wow. It's a wonderful space. I'm the front man founder, so I find it all super confusing. Thankfully, I have a wonderful tech team that are, going hard behind the scenes, and we're all really grappling with this thing because it's just going so fast. So thank you for your insight. That's great advice. There's so much more we could talk about, and we did have other things planned, but I do need to be, conscious of your time. And it's your birthday today. I forgot to mention it earlier, so happy birthday, and thanks so much for joining.
Thank you.
We're very, very grateful. Look, I'm sure everybody's learned a ton. We've covered, women-led VC and starting a women-led VC. That was a wonderful touch point. Obviously, we've talked about, women in startups and some solutions for that. We've talked about, Australian startups expanding to the US. We've talked a bit about AI. Like, I really feel like we've done such a great job, or you've done such a great job. I think people have learned a lot today. We like to finish with a segment. Quite often we talk about creative, healthy lifestyles at Cake, where we dig into the cultures of our guests and how they're grappling with, the modern work-life balance and trying to create, high-performance teams. We talked a little bit about this before, Marisa, but, how do you... you've got a growing team now, you've got a remote team, you were telling me, how are you tackling things to keep everybody, pumped and growing and looking after the portfolio?
So the two elements sort of like the team, and then what I do sort of like at a personal level. So for the team, as you said, so I'm in Laguna Beach, Kate's in LA. We have our new employee, Shatal, she's in Philadelphia. Our venture partner, Alexa, she's in New York. So it's remote, but we're also working across both the US and the Australian time zone. So, and there are East Coast and West Coast for the US. And then we also have, our, one of our investors as well, Nicola and Andrew Forrest Family Office in Perth. So, multiple time zones. So it's very much a remote model, flexibility. It's just, I don't care what hours you do each day when you're working. It's outcome based. If you achieve what you're supposed to in your role, great. We have very open and direct communication as well. Just there's no BS. It's like we don't have time for that. It's like, and that's how we operate as well with our founders. It's it comes probably from my upbringing, the tough love. We've got that.
Get to it.
That
no time for fluff. Like, there's no time for fluff. Let's do this.
We're on a mission. We want, I want everyone in the firm to be successful. I want our founders to be successful. So that's where and we have very direct conversations and just get it out there when things aren't working. So that's and then we do try and get together as well, at least once every 3 months for face-to-face time, and just have drinks and just to bond outside of the work stuff. And then for me personally, so I'm up 5 a.m. I have two girls, which is so a newish baby as well that's just turned 1.
And
so I'm up at 5 a.m. so I can work out. My husband takes us to the morning shift, and I take the evening shift when he works out. Now I need to work out every day. I then also do meditation as well in the afternoons, and I notice when because that's what the afternoons is when Australia comes online, and sometimes I'll jam my calendar with Australian meetings, and then if I don't have that time for that meditation, after a few days I start to sort of feel it, and I go, okay, yeah, I need to start doing it again. But then for me as well, diet is really important, and making sure that it's even to the making sure that you have your leafy green vegetables and vegetables or fruit at every single meal, and having that good balance of carbs and proteins and veggie.
Amazing. No, we're huge health advocates at Cake as well, so it's wonderful to get some insights into your schedule. I know personally, as I said earlier, if I'm not working out, meditating, not getting my sleep, drinking too much, it really takes the shine off the energy levels. And we're on a mission. So yeah, look, thanks for sharing. I'm so glad to hear you have your own routines. Look, thanks for everything, Marisa. Thanks for everything as a partner. Thanks for joining us today. Thanks for just the huge effort. You really must be overcoming so many challenges. So thanks for digging deep. I think you're on the right path. We're big supporters, and thanks for joining, everyone.
Awesome. Thank you, Jason.
Cool.
It's been great.
See you soon.
All right.
Bye for now.